This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, happy Friday, everyone. Carol Massar, Tim Stenovec across Bloomberg platforms, radio,
what a week. What a week, Carol.
I got to tell you, I showed somebody my calendar for the week, and they're like, I don't even know how you read that, because there's just been so much.
And just a heads up, she's got the paper version. It's the book. Lots of Post-its.
I like my paper.
I know.
I'm a visual kind of gal. And I got to tell you, speaking of visuals, look at the markets. We're on quite a run. We continue this run on Wall Street. Again, another rally underway. You've got speculation that the Iran war is poised to end. A lot we're going to get into on that front. Sending those riskier assets surging, extending a month-long rally that we've seen in U.S. equities, lifting the S&P to a succession of records, NASDAQ 100 as well. And then Bitcoin, your baby, in quotation marks.
Baby. Yeah.
Adding, right?
Yeah, they say, it's not my favorite child.
Okay, but adding a lot of value here.
Yeah, $12,000 over that series of days, this rally that we've seen over the last few weeks.
Pretty significant.
Oh, it's extremely significant.
And oil sliding, no surprise, and you'll see that play out in the discretionary space on equities. More on all of that to come. Hey, ahead this hour, though, one thing we thought about a lot, reading in this morning, seeing the headlines, is Iran really, really ready to give up its uranium? We're trying to understand this, if they're ready for a new way forward.
That's the question. On the war or the end of such, Bloomberg's Mishal Husain will join us on Pakistan, stepping in as a mediator and a broker of peace. We got insights from her conversation with a former Pakistan ambassador to the United States.
We're going to get into that. Also, Citi's Wealth Head of Portfolio Construction and Analytics weighing in on what it all means for the markets. Because when it comes down to it, right, all of these headlines, we know that all year long, all since this war, has certainly impacted the trade. So we'll see what she has to say about all of this.
All that to come over the next hour right here on Bloomberg Businessweek Daily. It is a packed program. Charlie Pellet is standing by in the Bloomberg Businessweek studio for an update. He's looking at markets. Hey, Charlie.
Thank you very much, Tim and Carol. Happy Friday. What a week. Got to begin with the weekly numbers. We are on track for our third week of gains on the S&P. On the week right now, up by 4.5%. Going to be very interesting to see how this final hour of trading shakes out. Keep it locked into Bloomberg television and radio for the very latest. The yearly numbers as well, worth pointing out that on a record-setting day for the S&P 500 index, so far this young year, the S&P is up by 4.1%. Today's numbers, S&P advancing to 7128, up by about 86 points right now. That is a gain of 1.2%. The Dow up 962 points, up 2%. Have been up more than 1,100 points, so we're off session highs, but still a sharp gain nonetheless. NASDAQ up 357, up 1.5%, record there. NASDAQ 100 index, also a record, up by 1.2%. All of this as oil plunges. The VIX just above 17 now with a 10-year 4.24%, the 2-year 3.70%. Gold is up 1.5%, 48.63 the ounce. Crude, the big story. WTI right now, 83.49 a barrel. It is down 11.8%. Brent crude trading for much of the day in the 80s, now breaking just above $90, 90.02 on Brent. It is down by 9.4%. On a day when stocks are ripping higher, one notable exception to the rally, Netflix. After earnings, the stock now plunging. It is down by 10.2%. Recapping, S&P 500 index surging 1.2% for the week, looking at a gain of 4.5%. Tim and Carol, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, folks, you are caught up to speed on the markets. You know they are rallying. This is President Trump said Iran agreed to suspend its nuclear program indefinitely and will not receive any frozen funds from the U.S. The president saying a deal to end the war is mostly complete. Talks over a lasting agreement will probably be held, Tim, this weekend.
Iran saying Hormuz is now open to commercial traffic, but transit must be coordinated with the IRGC. And President Trump said a U.S. naval blockade to persist for now. The claims, though, with Iran to remove the sea mines. He sent that out on social media earlier today.
And I feel like I keep hearing fragile ceasefire. Like there is still some questions out there about whether or not we can say that this is one and done.
Especially with regard to the uranium.
Yeah, exactly. And that's where we want to go. It's something we talked about on our morning planning call in a big way. Our question is Iran really ready to give up its uranium and chart a different path forward, a different regime, if you will?
Spencer Faragasso is here. He's senior fellow at the Institute for Science and International Security. It's a nonprofit, nonpartisan institution that's dedicated to informing the public about science and policy issues affecting international security. North Korea, Iran, Russia, and the use of advanced drones in the war in Ukraine is what he focuses on. He joins us once again from Washington, D.C. Spencer, good to have you back on the program. We last spoke a couple of weeks ago when the situation was actually quite different. Now the U.S. and Iran are talking via negotiators, and perhaps in Pakistan again this weekend. Based on what you can tell from the open source intel, is Iran ready to give up its uranium and actually chart a different path?
First off, thank you for having me back on the program. Ultimately, it's hard to tell. We're getting mixed statements out from each side over the course of these negotiations. Trump says something, Iran says something. We're waiting for Iran to release their own statement on this. A few days ago, the administration, U.S. officials were floating a 20-year ban on enrichment. Iran came back with a 5-year ban on enrichment. So we'll see how this actually goes. But I think the bottom line here is that getting rid of the highly enriched uranium, so the stockpile 60% and ideally the 20%, doesn't end Iran's nuclear program. Iran still has the ability to produce centrifuges and build enrichment plants and enrich its low enriched uranium stocks of uranium. And hypothetically, given enough time, investment, and commitment, it could produce weapon-grade uranium from those stocks alone.
So what changes here? So is this really, a ceasefire where Iran is different going forward? It sounds like that's not the case here.
Well, I think only time will tell. It's hard to understand what the motives of the Iranian regime is at this moment. Clearly, their economy is being battered by the war. The blockade that's happening at the Gulf of Oman is preventing them from trading. Most of their trade comes from seaborne trade itself. So payment, for example, of $20 billion would be a great boon for its economy. It's hard to tell ultimately what the ultimate goal here is.
How would we know? Let's say we get to a point, and look, I'm putting the cart before the horse here, but ultimately this is the goal of the United States, is to get Iran to stop enriching uranium and to abandon its plans for building some sort of weapon. How will we know that Iran is actually following along with those plans if the U.S. indeed does get to that point in these negotiations?
Yeah, ultimately it would have to be verified through international inspections led by the IAEA. The IAEA will need unfettered access to Iran's nuclear facilities. Since the June 2025 war, they haven't been able to access the facilities that were destroyed, such as those at Natanz, Fordow, and Esfahan. So without on-the-ground, unfettered access where Iran is providing a full and complete declaration of their activities, we won't truly know fully what is happening. And just to remind everyone, Iran has never come clean with the fact that it actually had an explicit nuclear weapon program in the early 2000s called the Ahmad Plan. And this is something it continues to deny to this day. But ultimately, these efforts need to be led by the IAEA because they have the experts and the capabilities to conduct these investigations.
All right. So in investing and in the financial world, how many times do we say past performance does not guarantee future results? So we know how Iran has acted in the past for a long, long time. Is that what we should take away and say, that's not going to change? Or is there something here that says to you, Spencer, that it is going to be a different Iran going forward? Or we really don't know. I mean, based on the regime, it doesn't necessarily feel like there's going to be anything significantly different.
I remain pessimistic. Wild cards and crazy things do happen in foreign policy, but with this regime, knowing that it's led by hardliners, many of them who are fully in support of a nuclear program, maintaining an enrichment program, it's hard to see significant change without a breakthrough in negotiation. But, I can't predict the future, and if I could, I wish,
Oh, go ahead, Carol.
Well, but if you were a betting man, are you going to say that you said Iran can come back in terms of uranium, that they can come back? Would you expect that they will ultimately?
If there's a will, there's a way. If they're given the opportunity, certainly they've been extremely resistant on any guarantee that they would abandon the enrichment program. You can take that the 5-year moratorium as a sign of that. They want some sort of capability in the future. And essentially any deal that provides a 20-year ban, which, to be very clear, that's a very long time. And in that time, you can lose tacit knowledge that's required and that's built up over time to actually operate an enrichment plant. But it's essentially kicking the can down the road again. Yeah. But it is a longer time period than anything that was guaranteed during the JCPOA, for example.
Yeah, I want to go back to what you said about the inspectors and getting unfettered access, because it would be, I would imagine, I'm not a nuclear physicist, but I would imagine it could be probable that a country, a regime could give access to inspectors to certain areas, but have an entirely different facility where something like enrichment could still take place. Again, I'm not a nuclear physicist, but wouldn't that be possible to do in like a secret underground location?
Iran's a very large country. For example, in the early 2000s, when they admitted to having the Natanz enrichment plant, they put that under safeguards. All the while, they were still hiding and building the Fordow enrichment facility, which was eventually revealed by the international community in 2009. Anything is possible, but this is why the IEA and the United States need to negotiate an ironclad deal that enables them to conduct the investigations that they're capable of doing to fully verify the peaceful nature of any nuclear activities.
Is it safe to say, 30 seconds here, Spencer, as we wrap up, that there's going to be pressure, obviously from the U.S. and from the developed world, but also from the region for Iran to do this and change its course going forward?
No doubt. This nuclear program is a source of tremendous issues and problems for not only the Iranian people, first and foremost, but the region itself. It's a source of conflict. It's a source of instability.
All right. Good stuff. As always, so glad that you were back here on Business Week Daily. Thank you so much. Spencer, of course, Faragasso, he's Senior Fellow at the Institute for Science and International Security. It's a nonpartisan group. All right. You're up to date on the war at this hour, but of course we're going to keep an eye on it and continue to track.
Yeah, equity markets surging. We just heard the latest from Charlie, worth repeating and worth looking again. The S&P 500, a new record, up 1.1%. The NASDAQ Composite up 1.3%. The Dow up 1.9% as we speak. This over optimism after the reopening of the Strait of Hormuz promised to ease this oil shock that's really clouded the global economic outlook since the U.S. launched its war against Iran. That was at this point 7 weeks ago. Yeah,
we're seeing the tech-heavy NASDAQ 100 hitting a record, S&P 500 also hitting a record. So we're curious to see what our next guest has to say about how this all trickles into the markets. We're certainly seeing a reaction today. With us is Olaolu Aganga. She is head of portfolio construction and analytics over at Citi Wealth, joining us right here in our studio. Thank you so much for our patience. We're trying to make sense of the latest on the war. What's your read on the news today? Is it all right, time to look forward?
Well, firstly, thank you all for having me. This is really, really good. So at Citi Wealth, under Kate Moore as our CIO, we have had, it's 4 months in, it's almost felt like a year, really. Yeah. Like we've absorbed multiple shocks just in the last few months. Now, on a week-over-week basis, we've seen conflict in the Middle East. Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down, right? So you have a real risk of being whipsawed. And that's frankly what we've experienced just already. Part of what we do, and a big part of what we have to really be focused on, is looking through the noise, because it's been changing so much. So overall, we've been looking at fundamentals. We've been looking at a lot of the macroeconomic data as has been coming out. We've been looking at earnings
Throughout the war, you've
revisions.
been looking through the noise?
From the beginning. We entered the year constructive. So we entered the year constructive in global growth. We entered the year pro-risk. We have made adjustments since the war, actually. More focused on resilience, more focused on quality, more focused a little bit on defensiveness, but then also really looking for opportunities.
Do those changes that you made during the war, do you go back to what you had before the war, if this is indeed the end?
So one of the changes that we made was our regional equity exposure. We trimmed a little bit in Europe, and we added to the U.S. Now, even if...
Because the concerns over energy, and Europe is much more reliant on that part of the world.
Much more reliant on that.
So that's why you made the switch.
We made the switch. It showed the exposure. But even if the war was to end tomorrow, officially, we're still looking at the read-through on the companies and the earnings revisions and where that growth is coming from. And the U.S. is still delivering resilient and delivering resilient earnings and more consistent earnings. And revisions and earnings revisions are coming through more strongly in the U.S. and the fundamental and macro backdrop in the U.S. is much stronger, much more insulated from a lot more of the macroeconomic environment and the shocks. And Europe is a bit more of a challenging period.
So U.S. exceptionalism is back? Or did it ever go away, really?
There's a bifurcation on that when you look at the asset classes. So from an equity standpoint, yes. From a fixed income standpoint, it's a little bit more nuanced there, I will say.
Good point.
So the credit picture, we've trimmed in credit. We actually moved to a little bit more shorter duration.
For the U.S.
For a fixed income standpoint.
Yeah.
And this is beyond the war. Spreads are at historic tights. That's the way it was. Even when we saw the shock, you didn't necessarily see that same pickup in yield to be able to compensate for that.
You said you moved away from Europe a little bit to exposure to equities here in the U.S., partly over what you think will happen as a result of a hit to earnings. Okay. Do you think the U.S. companies see a hit to earnings as a result of higher energy prices?
There's some. As you start looking at raw materials and fundamentals, so input costs, how much could U.S. companies pass through? Mm-hmm. Just today, of course, it looks like we're at a little bit of a ceasefire. The Strait is opening. Airline stocks are surging.
I know.
But
cruise lines too, yeah.
And cruise lines as well. But if it was persistent for longer, you'd see some areas that could be more affected. So there'll be sectoral type of dispersions as a result of this, some winners, some losers, but then also opportunities.
One thing I want to ask you, things like energy, which we've seen just on a tear, is that a longer term theme for you guys? Defense stocks, we're going to talk later on our broadcast about the president's budget and how much looking for defense spending in the United States. We're talking about $1.5 trillion that they're asking for. And we know defense around the world seems to be a sector, or countries are all beefing up their presence. And just raw materials, commodities as a whole. Yeah. Like all of a sudden we're talking about it a lot because everybody wants to make sure they have a healthy supply chain to it. And I wonder what the costs are or the investment play off of that. So all of that. Go ahead.
So in what you said, the critical thing that we see persisting, regardless if, again, conflict ends tomorrow, is supply chain. So the supply chain with regards to energy, supply chain for raw materials, supply chain for infrastructure, and the need for that, and fortifying that, the conflict in the Middle East really just highlighted and exposed what should have been in play when we were going through the pandemic. And that we needed to be able to fortify that. Now it's brought it to the forefront. We really need to focus on that, and we think that theme will be consistent regardless. We need to be able to fortify those supply chains. Now, the supply chains for commodities, for raw materials, for energy, but then also another thing that I know we're not necessarily talking about today because the conflict in the Middle East is top of mind, AI and the supply chains around that, we don't see that as reversing. So as we are looking at opportunities, and there's a lot, as you said, of noise back and forth, which could cause some short-term disruptions, we're focused on what could persist and what would play out for the more medium and longer term.
What would that be? 30 seconds.
AI.
But I mean, like data centers, and like, what's the play?
Everything associated with the critical needs of AI, robotics, supply chains, energy, infrastructure. So we're doing a lot of work around that thematically, and we're talking to our clients and advising them, and that's where we see opportunities going forward.
So good, so good. Olaolu Aganga, of course, head of portfolio construction analytics at Citi Wealth. Thank you so much. Yeah, come back soon.
Good to see you. Hey, coming up next on Bloomberg Businessweek Daily, it's one of the day's top decliners, even though there aren't that many stocks that are actually lower. It's a standout. It's one of the best known names around, a great read on streaming. We're, of course, talking about Netflix when Bloomberg Businessweek continues. That's next on the program.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all in the green right now, on track for a record close, also on track for the S&P. for a weekly advance of over 4%. It will be the third week of gains in a row on the S&P 500 index. Right now, we are trading off our session highs. The S&P is up 75. That is a gain of 1.1%. And to be sure, it is a record now. The Dow up 888, up by about 1.8%. NASDAQ at a record, up 1.3%. The NASDAQ 100 index up by 1%. The VIX just below 18 right now with a 10-year, 4.24%. Gold is up $69 the ounce. Spot gold up 1.5%. $48.59 the ounce. West Texas Intermediate crude tumbling 11.5%. $83.78 a barrel on WTI. Brent right now at $90.52. Barrel of Brent down by 9%. Keeping an eye on Intel, the stock now trading lower. It is down by 0.5%. Have been higher for much of the day, but Intel trading close to its highest intraday level since 2000 as optimism continues to grow that the chipmaker's ambitious turnaround plan is bearing fruit. And one other tech note, Apple's marketing executive in charge of the Apple Watch, AirPods, health, and smart home initiatives says he is retiring. Stan Ng is leaving the company after 31 years. We got Apple today up by 2.5%. Again, recapping here, the Dow, the S&P, NASDAQ all in the green. S&P up by 1.1%. The VIX just above 17 now. And we've got West Texas Intermediate crude down 11.6%. Lots going on. Tim and Carol, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Tim Stenovec live here at Bloomberg headquarters in New York City. Yes, indeed, a stock on our radar. You know, it is a top decliner in the NASDAQ 100, a top decliner in the S&P 500. We're talking about shares of Netflix. Stock's still down about 10%, tumbling the most in 4 years on an intraday basis after the company gave a forecast for the second quarter that fell short of expectations on Wall Street. Underwhelming the street just months after it lost out on that bid for Warner Brothers Discovery, which, when they did finally lose out, investors kind of cheered it.
They were really happy about that.
Yeah.
The stock had been getting punished, and it's up quite a bit since then, even with today's decline. The streaming pioneer also announcing that chairman and co-founder Reed Hastings is stepping down after 29 years at the company to pursue philanthropy and personal interests. So we are extremely interested in the quarter and what Netflix looks like without Reed Hastings, the guy who really helped create and change the way that we consume TV now. Covering and guiding the media and entertainment coverage here at Bloomberg is Bloomberg News media and entertainment editor Felix Gillette. He's the author of It's Not TV, The Spectacular Rise, Revolution, and Future of HBO. He joins us here in the Bloomberg Businessweek studio. We'll talk about the quarter a little bit in the guide, and you know, I think that's a big part of the reason the stock is moving. But we're also really interested in Reed Hastings leaving, you know, officially. I think it's fair to say he's had a foot out the door for a couple of years since he hasn't been CEO, and he handed that off to people who I think investors would describe and analysts would describe as very capable people. Maybe you would describe them that way too?
Yeah, I mean, I think compared to some of their competitors, this is an example of succession that's worked very well. But at the same time, it does feel like Netflix is at this fascinating crossroads right now, right? They just went out and tried to make this enormous M&A deal to buy Warner Brothers Discovery, then backed out of it. And, you know, just a couple months after all of that goes down, now Reed Hastings is leaving the company for good. So, yeah, it's a really interesting time to think and pause and be like, well, what is Netflix's future? What's their next move? And I think, you know, there's some question about where the growth is going to come from.
Step back. If they had gotten Warner Brothers Discovery, do you think we'd be talking about Reed Hastings leaving the board?
I think it's possible. I mean, he was never, you know, into the M&A deals. He was always very much about growing organically. He always had concerns about how these huge deals play out culturally inside of companies. I really do think this was driven by the current CEOs. But at the same time, yeah, there might be more interest to stick around and figure out how that, you know, transaction would have gone down. He's always been super interested in the cultural engineering. How do you put together a workplace culture?
Yeah, and the 2009 culture deck that got so much attention. This idea that you don't treat your colleagues as family, you treat them instead as teammates. And I think he said, you know, average employees will get generous severance. Like, he doesn't want average people. He encouraged people to go out and actually get other job offers, come back with them so then Netflix could beat them. So they'd actually look, you know, at what they're worth in the marketplace, like pro athletes.
I mean,
did that shape the company?
Yeah, I mean, from the beginning, it was always, he always treated it as this experiment, almost like a laboratory, and how you make people work together. And I mean, what's fascinating when you look back at the history of it is like, Reed Hastings had no initial ambition to even go into the entertainment business, right? They were like, we just are interested in online retail with the internet. And they were thinking about dog food or baseball bats or all these other surfboards. And then they're like, these new little things called DVDs would work perfectly in the mail. We could send them out. People could, put in the request via the website. And, you think of how much entertainment history has changed because of that decision. But yeah, I think that like the entertainment side was almost separate from his initial interest, which was like web-based retail and also that component of like the experimental workforce.
And yet here we are. Netflix is the streaming company to beat, right? Ahead by a long margin or wide margin based on everybody else. But having said that, investors are disappointed. And I guess one of the things we were trying to get after the company reported earnings yesterday, Felix, is it because they didn't get the content from Warner Brothers, or what's going on here?
I think part of it is
expectations.
Yeah, I mean, it's expectations. It's also looking at the engagement with Netflix content, which has kind of flatlined a little bit over the last couple of years. And I think people are wondering, where does the future growth come from? If it doesn't come from a Warner Brothers Discovery acquisition, they've tried to do things like video games that hasn't really proven to be a big hit yet. More recently, they've started going into podcasting and more topical content, sports. But I think it is a question, like, where is that growth coming from? What's the plan exactly? You add in the charismatic founder leaving, and yeah, people have questions.
Ted Sarandos on the call yesterday said podcasts on the service are, quote, doing great, and that the price hike, Greg Peters saying the price hike hasn't changed customer behavior. I want to talk about AI with you. We're going to get to that in a second because they made some comments about AI on the call yesterday. But before we do that, to Carol's point about diversifying away from the core product.
Yeah.
Like, if we were talking 5 years ago, 6 years ago, Netflix would never do live content. Netflix would never do games.
Yeah.
Netflix would never do sports. Like, leave that to the traditional players.
Right.
Now, the Netflix of today is, I think, almost maybe unrecognizable to people who knew this company 5 or 10 years ago.
Yeah.
Is that as a result of what it views as competition, which is whatever anyone is doing on their phone or on their screen when they're not watching Netflix?
Yeah, I mean, I think that very early on they pivoted from being, our competition is HBO to our competition is YouTube, Twitch, sleep. I think they said that at one point, like just anything that like takes people's time. Like we're in the time business, we're in like getting people, and there's so much competition on all these different fronts, and they're trying to do this at a global scale, which also is like part of the ambition and vision for that. And I think that that's great, except for the fact that the original programming has worked. And the advertising business is growing. They've proven that they can do live sports, which again 10 years ago you would have said they're never going to have an NFL football game. They have an NFL football game. You can watch it. It doesn't glitch. They're serving advertisements in there. So that is again it's adjacent to what they started off as, but it is different. But the podcasting is a huge question mark. Is that actually, so they've struggled with topical content forever. They've tried all these different talk shows that there's just a long roster of comedians that have come in there, done a season of episodes and then just disappeared. And so I think that challenge of getting people to show up at a specific time to watch a specific thing, which you need to do in order to grow your advertising business, is really at the forefront of what they're doing. And I think that they're showing some real progress there.
I'm looking at, our story by Lucas Shaw that's out on the terminal, and it just talks about, under Hastings, which he introduced the Netflix service ultimately in more than 190 territories, outmaneuvering Hollywood studios to build the most valuable entertainment company in the world. You really think about its place, right? When it comes to content creation, it really is a behemoth. I do wonder, though, getting back to that idea of, at some point, is there just too much stuff out there. Is there an excess capacity in this industry where it just starts to kind of eat into some of these services? It's just going to have to.
Yeah, I mean, I think that's been one of the challenges for everybody that's built a streaming service. I think Netflix has been more successful at building discovery options, creating an algorithm that serves up viewers things that look interesting, but it's still a challenge. It's still like, as everyone knows, they jump on a streaming service. What do I want to watch? Oh, there's only 50,000 options sitting there. And there's a paralysis that's involved with that. And they continue to work on that and trying to figure out what is the best technology for surfacing things that will get people to watch and keep watching. But that's like the end. That never will end. I feel like that's the challenge that just goes on forever for Netflix and
all
everybody
of them.
else in this
I always
business.
feel like I look and I'm like, nothing to watch, which is crazy, right? And I don't know whether it's being overwhelmed.
It's okay. My friend has this notes doc with all the recommendations that he shares with us. I'll share it with you.
So we talk about the makeup room. So what are you watching? What are you watching?
It's also fun to look at someone else's Netflix front page because it's just so totally different. You're like, wait, that's the same service as mine?
Yeah.
And that's the ideal for them. I mean, to create to surface stuff that it thinks will keep you engaged. Hey, speaking of technology, that Netflix acquisition of Ben Affleck's Inner Positive for $600 million, as much as $600 million.
You're obsessed with this.
I am because the AI story is so important in Hollywood.
Yeah.
Ted Sarandos yesterday on the call said AI will give great artists better tools. Netflix has to thread this needle where they don't alienate creators, but also make sure they adopt these technological tools that allow for, I guess, things to be more efficient. How do you see this?
I mean, I think everyone is grappling with this in the industry. All the studios are trying to walk that, tightrope between, you don't want to alienate the creators who are very worried about AI replacing them. But at the same time, the history of television and film and animation, all of that has always been this incredible mix of storytelling with technological advances. And, you don't, at what point do you cut off and say, oh, we're not going to, play around with any new technology? Like, that would be crazy. We'd still be watching, silent black and white films.
Claymation.
Right?
Yeah. Just remember
Gumby's awesome.
Gumby and Pokey are cute. Very cool. But, right?
So I think the question is who is going to be able to use this technology in a way that, it's clearly you can do it to create low grade, cheap content that doesn't really move the needle for anybody, but can you use it in a way that actually inspires and pushes things forward? Netflix, like everybody else, is proactively trying to get involved in that and figure it out. I think part of it is, special effects, part of it is, CGI adjacent. But I think, it's still, that's going to be the huge question for the next year, 3 years, 5 years, 10 years for Netflix.
We're trying to figure it out.
Fortunately, we got Felix to help us figure it out. Felix Gillette. He's Bloomberg News media entertainment editor. Also, check out his book, It's Not TV, The Spectacular Rise, Revolution, and Future of HBO.
Hey, when we come back, we're going to get back to the war, what's top of mind for investors. We'll continue to do that. We have President Trump saying Iran uranium will be brought back to the U.S. This is from CBS.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are holding on to gains. We're looking at records for the S&P, NASDAQ, and the NASDAQ 100 index. Meanwhile, the U.S. is now said to be eyeing Monday talks with Iran in Pakistan. That according to a headline right now from the Wall Street Journal. S&P up 83 at 7125. That is a gain of 1.2%. The Dow up 901, up 1.9%. NASDAQ Composite Index up 345 for NASDAQ, a gain of 1.4%. All of this with the VIX at 17, the 10-year 4.24%, and the 2-year currently yielding 3.69%. So stocks are surging, extending a record-setting run. The S&P 500 index on track for its biggest monthly gain since 2020. Also on track for a third week of gains for the S&P. Spot gold up $71 the ounce now to $48.61, up 1.5%. West Texas Intermediate crude now down 10.6%, $84.64 a barrel. This time yesterday we were talking about $90 crude. Brent, by the way, back above $90.94. It is down by 8.5%. Oil majors moving lower. Shares of Chevron down now by 2.5%. ConocoPhillips among the names declining, down by 4.7%, and ExxonMobil down by 3.8%. Recapping, stocks higher. S&P up 83. That is a gain of 1.2%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we have some interesting headlines. About 2:35 p.m. Wall Street time, we got a report go across the Bloomberg that the U.S. and Iran are meeting this weekend. This was coming from CBS News, citing a phone interview with President Trump. The president also telling CBS that Iran needs to stop backing proxy groups like Hezbollah and Hamas. Meantime, Tim, then we got something from the Wall Street Journal.
Yeah, the Wall Street Journal reporting that the US's Monday talks with Iran, those once again in Pakistan, the Wall Street Journal cited senior administration officials on those talks, which the journal reports as, quote, likely.
All right, so all of this going back and forth. We do want to point out, though, that Pakistan has emerged as the unlikely facilitator of U.S.-Iran peace negotiations. And with the prospect of additional talks looming, as we said, some interesting developments, whether it's the weekend or on Monday. The man at the center of those efforts is the country's army chief. And we've written about this a lot on the Bloomberg. We want to talk about that aspect and more. Great to have back with us journalist and author Mishal Husain. She's the host of the Mishal Husain Show. It's a podcast from Bloomberg Weekend. She's also the author of Broken Threads, My Family from Empire to Independence. She joins us here in studio. It is great to have you here. It's a gift, truly.
So nice to be with you, Carol and Tim.
So talk to us a little bit about this news flow and how you're kind of taking all of it in terms of the U.S. war in Iran. Do you see it as a fragile ceasefire? Do you see it as progress? Are we moving back to normal, whatever that may be?
It has been a long and difficult 7 weeks, and it's extraordinary, really, how many countries, while there are only 3 countries actually involved in this war, so many others have been drawn in economically and diplomatically in other ways as well. So I think that the last 24 hours have offered us a moment of hope, but this is a continuing moment of peril because even hopefully, if there is some kind of outcome from this process in Islamabad, it might well still be fragile. But I think the story of Pakistan emerging as this broker at this moment in time is one that goes back to the early days of the Trump administration, primarily because Pakistan handed over a terrorist suspect to the United States, someone accused of being involved in a bombing in Afghanistan at the time the US was withdrawing. So that was the first sign that brought about a moment of bonding between the Trump administration and the army chief. And it's that relationship that has developed. But it is important to remember that the relationship of one man, even in this setting, isn't everything. And therefore, there has been frantic diplomatic work on the part of Pakistani diplomats and the government of Pakistan. And that's been happening all this week between Islamabad last weekend and whatever happens this weekend.
So if talks in Islamabad are successful and ultimately this war does come to an end as a result of negotiations that happened between the U.S. and Iran in Pakistan, what does Pakistan look like after the war in terms of an emergence as a different kind of country, perhaps viewed differently on the world stage, perhaps viewed differently by President Trump?
Well, primarily what they will be hoping for in Pakistan is that it looks different economically, because there's an immense amount of self-interest involved from the Pakistani side. It imports 90% of its energy, most of it from the Gulf. Schools have been closed, universities have been closed. The government was desperate to avoid scenes where there are long lines of vehicles waiting at gas stations. And the only way it could avoid that was to basically say that children were not going to go to school, and that a lot of people couldn't get to workplaces either. So there's been an immense economic impact. So that will be the primary hope that changes. But there's no doubt about it that, of course, this gives diplomatic status. In the words of Maliha Lodhi, the veteran Pakistani diplomat we spoke to last weekend, it's another indication of the importance of middle powers. This is a kind of Mark Carney, another previous guest on my podcast line, but that there is a role often we just think about the superpowers, but there is a role for others. And Oman previously was involved in mediation, had its fingers badly burnt. Turkey was sort of talked about as a player, but really only Pakistan had enough of a relationship with both the US and Iran to be able to play this role.
We have some of your conversation from Malia Lodi, former Pakistani ambassador to the US. This was from your conversation, and I believe it aired last week. Let's listen up, everybody.
Certainly the Middle East has changed forever. It will not be status quo ante at all. Things are not going to go back to what they were before, that's for sure. Now, what comes in its place, it depends on, I think, realignments that will take place, reassessments that many Gulf countries may have to carry out. I mean, what happened to them? So many of them are feeling abandoned by the United States. Many feel that this American security umbrella, when the push came to shove, it was of no value to them because America didn't defend them.
All right. So again, Malia Lodi, former Pakistani ambassador to the U.S. That was last week on the Mishal Husain Show. Significant voice and giving us some really good insight. Because I think one of the things we keep trying, it's very easy to hear, the American perspective, what we're hearing from the White House. But as you said, the impact of this war on Pakistan, I don't think we don't have the energy lines or gas lines here, but it's impacting many different nations on that side of the world very differently.
And Carol, I'd also say the UK, where I live, has been what the government has been hoping to do in terms of policy terms, its financial calculations, those have been upended because the UK is also a significant energy importer. And so it is not only places in Asia, it is also countries in Europe, and certainly the UK of the G7 nations is particularly exposed. So the ripple effects of this have been enormous. And I think Malia Lodi's right. The world, even at the point that we have an actual agreed ceasefire, the world is going to look and feel different.
Well, let's push that forward a little bit, because I'm wondering about the view of the United States and its role in the world, because you spent a lot of time looking into what happened in Venezuela and featuring guests on your program from Venezuela after the U.S. invaded Venezuela, or rather the U.S. took Nicolas Maduro here to New York. What about what's next and the way that the U.S. is viewed? It's certainly driven MAGA apart in the U.S., but has it put other world leaders on notice?
Well, look, it's understandable that the United States, the Trump administration, but more broadly, other elements of the United States are going to want to portray this as a positive moment. But other parts of the world will look at the events of the last 7 weeks and think that we also saw the limits of US military power, that with all its overwhelming military might, the United States had to send a high-level delegation to Pakistan to discuss things with the Americans. If you have overwhelming military power and other power, you don't need to have that kind of conversation.
So, Mishal, who feels emboldened then by this? And we've just got about 40 seconds.
Well, I think Xi Jinping and Vladimir Putin will both have learned interesting lessons. The international attention has shifted away from the Ukrainians, and that will have been of benefit to Vladimir Putin. So I think that, of course, it's grabbed the international headlines. And, no one really wants to mess with the United States and risk anything like this. But equally, I do think that we have seen limits to American power in these last 7 weeks.
Yeah, it definitely does feel like a different way forward for the world at large. Mishal, thank you so much.
Great to be with you.
Great to have you here once again. Mishal Husain, host of the Mishal Husain Show, a podcast from Bloomberg Week. And she's also, as we mentioned, the author of Broken Threads, My Family from Empire to Independent. But be sure to check her out on the Bloomberg, on your podcast feed, and at Bloomberg.com.
Still seeing stocks higher. In the last 5 days, the S&P 500 is up 4.5%. Right now, the S&P up more than 1.1%. The Dow up 1.9%. The NASDAQ Composite up 1.4%. Stocks on the move next on Bloomberg Businessweek.